G'day all, Ben here, East West. Volatile week in the markets. Looks like uranium's trying to find its feet. So let's just jump in and have a look at some of these stocks. So here we are with URA on the daily. This is where we were last week, just here, just as we were approaching this value area when we were taking off the start of the rally in 2023. I did mention that if you wanted to go into the market this week, be prepared to wear a little bit more downside, which sort of happened here. We did slip down a little bit further, but it was a very dramatic week in markets overall. I think we can all agree on that. Now, last week someone did accuse me of scaremongering people who were on edge about how far the market had fallen. Nothing's further from the truth. If anything, I'm trying to ram home the idea that if you have within your scope of plan what happens if the market falls this far, then there's no need to be on edge. There's only one reason to be on edge, and that is if you're sitting in the market here in May, okay, if you're looking at URA and you're long here above $30, if you don't have within your scope of plans what happens if it falls below 25, well, that would put you on edge because you haven't worked out a proper plan about how you're going to deal with your position. No one's trying to scare you. But the reality is, it's like if you're sitting here at $30, it's like, okay, well, if it goes to this, I'll do that. If it goes down there, this is what I'm going to do. Don't get caught with your pants down. You just and you know what? Your plan might be if it goes to 25, it goes to 24, it goes to 23. That's okay. I can sit on it. That's fine. I'm not going to get out. Or maybe you wanted to get out below this point. Point is, if you have a proper plan about what could happen to the market going up or down, you don't have to be on edge. You shouldn't be on edge at all, which means you shouldn't be scared about anything. Now, I don't think me highlighting the possibilities and just reminding everyone that the market can fall a lot further is scaremongering. It's just more about proper plan preparation. And, there's no way that the 50 people who watch past the first minute of my videos are going to influence the price of the market. It's ridiculous to suggest that anything I say or do is going to have an influence on price. And obviously, this is a video you're watching on YouTube, and so you've got to take everything I say with a grain of salt and make your own decisions. I mean, disclaimers everywhere, of course, but you're not paying for financial advice here, and I'm not trying to predict what the market's going to do. I'm simply reading what the market is doing and trying to make a decision based off what I can see here and now. That changes, but I'm definitely not predicting anything. Never have, never will. All I'm doing is simply trying to offer an agnostic overview. I don't really care if uranium goes up or down. It doesn't bother me one way or the other. Okay, I'm not going to live or die on this hill. I can guarantee you that. And in terms of this comment has since been deleted, by the way. But it was suggested that you're suggesting that you can only buy this market if you're like throwing money onto a bonfire. That's not what I'm saying. What I'm saying is you've got to have the mentality. If you're going in here, you've got to have the mentality of being able to watch the position go out of the money, which would feel like having money on the bonfire. I mean, look, it's the attitude that I take into some other like, for instance, I hold Bitcoin. I'm prepared to watch a lot of money burn in that thing because I believe longer term it will be higher. So I'm not puking out on this downdraft, which to me is akin to feels like watching money burn in a fireplace or on a bonfire. But I'm not getting out. Okay, if I was worried about that, I would have plans in place to get out. Same with this. Okay, if you're worried about that, then this is going to be a difficult thing for you to hold on to. Like I saw this tweet this week, and this is something that this is pretty much what I'm talking about. So look, there'd be plenty of people that feel this way. I think uranium is the most awful, depressing shit of all time. I just want to take some money off the table soon and never have to think about this bullshit trade ever again. It's too much misery. Okay, well, there's nothing wrong with feeling like that. We all look. I've definitely felt that way about positions that I've been in, and all the time. So if you do feel that way, that's okay. Don't worry about it. You just have to make a concrete decision within yourself about what you want to do. You either want to hold on for more because you still believe in the story, or you want to get out. It's natural that your mind will tell you, will say, I'm not feeling comfortable about this. I want to get out. If that's what you want to do, that's what you want to do. All right. Don't be influenced by me. Don't be influenced by anyone else. Don't be influenced by any pumpers. Just do what feels right for you. So anyway, you don't really want to hear me rabbit on. Let's just actually look, because this is just what's going on here in the here and now. So just looking at this on the big picture, this is kind of what we were highlighting, that we might run into this sort of stuff, which we did. We just had a little poke through, but there was some pretty extreme stuff going on last week. There's no doubt about that. So even though we have had this dip down here, and we did come down here, we more or less held. I mean, you could even fatten this right out, to encapsulate that, but we did slip through it. But it was a very quick blip through it. In fact, when we come in and look at this, I mean, that looks like a blow off bottom to me. I mean, take the colours out. This is open on the lows, exploded up to the highs. That's a pretty good push off the bottom. And obviously, coming off here, we're at maximum velocity off the, on the RSI. So maximum downward velocity once we sort of broke below that sort of 30 level on the daily. No divergence there, but like I said, that's not the be all and end all. But quite interestingly, look at the volume. Look at the volume on that candle. It was big. So the buyers really stepped in here. Like the guys hunting value really stepped in there. And the market had fallen 30% from its peak, so it was a good flush out. So I wouldn't have said we're exactly out of the woods yet, even though the market's done okay to find its feet since really it was Monday. It was really the beginning of the unwind of the carry trade in Japan that caused the bulk of this. Of course, that this is that this could come down a little bit further. There's always that chance, which I'm not trying to scare you. Don't be scared. I'm just saying, just have it with, just think about your scope of plan of where you sit right now and what you want to do, and where do you think you do feel uncomfortable. Okay. Now, if I'm long term in this, for me, of course, then I would personally, I would be very concerned if we got below there. Okay. And now that might be too far for you to handle. It may not. It may be fine. It just depends on the scope of your plan. But enough of that. So look, we have had that sell-off, but I think now we've just got to concentrate on the short term. That's what's important now. So we've just got to get up close and personal here. And okay, so we had this gap here, and that got filled, so that's great. And then we've got another bearish gap that just sits right in here. So that would be the first thing I'd be looking for, that to just come in and get filled. Okay. Now, when we come in and examine what's happened off the bottom here, let's just go down to a 4-hour. In fact, let's even just go down, fix that up a little bit. Let's just even go down to 1 hour. So the only thing I'm seeing here is, okay, so what would I want to see here? Basic trend. I mean, is that enough of a pullback? It's kind of just struggling a bit today. But this is the kind of thing that we want to see on the short term to just make us think, okay, then, we've got a bit of a trend going into place here. Now, the thing about this, rightly or wrongly, I'm not too sure, but we just haven't had any sort of decent sort of retrace that's really tested the buyer's resolve. So I do remain a little bit wary. This is what I'd just be thinking, okay, well, look, things don't have to pull back to the 50 or the 61.8. They can be a lot shallower, okay? So far, this has held its ground, but I think the market generally is just holding its breath to see what next week brings. But if I saw that, then I'd be feeling pretty good. That's just the classic thing that I'd be looking for, which we don't have, but it's not a key ingredient. So far, we've got this, but really, we just want to come in and beat this top. So don't be worried if we have a little counter trend like that. Ideally, we want to see in the big picture the market trending through that gap. That would just be stage one. Okay, that would be part one of what we want to see to be more confident that this is in fact a major low. I certainly wouldn't be declaring that this week. I think there's a fair bit of water to go under the bridge. But what else would I want to see? Well, I should just reverse that. Coupled with this gap being filled, I want to see the market get through the main retracement zone. Okay, and then we can come in and start testing a bit of this, but obviously getting through the top of this here, just around this $28.60 mark, would be great. So I think just keep your expectations. I mean, look, anything can happen, but just keep your expectations anchored, because we've still got a fair bit of water to go under the bridge next week in terms of data. So I'm not I'm not sure how that's going to affect the overall market. But certainly if we can get through this in a trending motion, that would be, that is, I mean, it goes without saying, that is what we want to see. But word of warning, we could just experience like, some more sideways action as the market starts to build a bit of a base. Okay, so yeah, they'd be the two things. So even if we saw this sort of sideways action, I wouldn't be too worried about it. I'd just be thinking, and look, it's not unlikely that after a big sell-off like we've had, that we go into a bit more of a trading range. Okay, and that would be okay if we go into a trading range like this. Just say, for example, you see something like that. Well, then I don't think you lean heavily into Wyckoff, but you lean into the idea of looking for the failed break of the range and then the subsequent push higher. That would be the kind of thing that you'd look for. Okay, which feeds into that Wyckoff sort of theory of the spring. But we don't have this, so they'd be the two things I'd be looking for. But ultimately, it's the same thing. Even if we go sideways, ultimately we want to see the trend eventuate. Okay, we don't quite have it here with URA, but these are the areas. So the gap, the retracement. Let's just see how this pans out next week. Now, just coming in here, look at CCJ, sticking to the hourly, because I just think it's about looking at the short term at the moment, and this one's a little bit more constructive, right? So this is kind of that gap that we had in URA. This is kind of the gap here that we've pretty much feel we've come and tested at the very least. But I like the price structure of this one a little bit more, because when we look at this, we've had the first retracement. Okay, perfect to the 61.8 and then through the target. So that's good. So we've got a pivot here. We come off this pivot now. Okay, and we've got another tag down here to the retracement zone that we've pushed away from. So what I'm getting at is that, at various times the sellers have tested out the buyers. Do you really want them? The buyers said, yes, I do. And we've managed to push away from these 2 points. So we do have an uptrend. Okay, now the market's a little bit out of steam today. Friday caution. That's probably not unrealistic to think that was what was going to happen. Even just looking at the mini S&P at the moment, what are we we're after the cash close here, but we're up about 20 points. The Nasdaq's up about 100. It's pretty tight considering what we've seen this week. So what we would like to see here is just a move up to at least this measured move target, which would properly fill in this gap. Okay, so that is pretty straightforward. But this has got a good start. Okay, so same thing here. I mean, we want to get through this major retracement area, and then that way we can come up and test it. I mean, you can just see it here. It sort of lines up with the 78.6. We just got some lows in there that just provide a bit of a structural area and just a bit of support that we can see in there. When we've got a little bit of a gap here too that we need to fill, but the game remains trying to get through the top of this swing eventually. Hopefully not doing that. But word of warning, same thing could happen here. Definitely not impossible. We could form a trading range and just start going sideways a little bit as we consolidate. And then, like I said, it'll be the game of seeing if we just have a false breakout and then a breakout to the top. Okay, with a Wyckoff sort of idea rather than actual adhering strictly to any sort of schematic, but just the idea of the failed breakdown out of the trading range. The attempted breakdown that fails, and then the big pushback the other way. At that point, we go, okay, this starts to look good. It's starting to find its feet. So we are not there yet, that is for sure. There is some water to go under the bridge. But so far, so good in Cameco. I think this looks a bit more constructive than some of the others. We've got this very short-term trend line in place. So we can make that a channel. Very short-term, touches on the bottom, that's fine. Top's unproven, only touch once. Okay, so we only got one pivot. So, the trend line at the bottom, even if we lose this, I wouldn't be too concerned. Sure, there's always the possibility that we're going down further. Okay, but there is always that possibility because we just don't know if this general market shakeout is done yet. Okay, so maybe we do come down here and test the 61.8. Maybe we do come down here and test the trend line. I don't know. Maybe we don't. Maybe we come down here and sorry, that's not the 61. It's the 50. Maybe we do test the 50 next week. I don't know. I'm feeling okay about the general market. I think it's done okay to find its feet, but this can never be ruled out. So just make it part of your plan so you don't get scared. and you don't become on edge if it gets down there. It's all part of the thinking. It's all part of the plan. Okay, so URNM, and as my man the Red Devil pointed out, these ETFs are important, more so URA, more so than URA. The URNM and URNJ particularly, you want to see the participation in any sort of rally from those sector leaders, because it means there is broad-based participation in buying up the uranium stocks. So yeah, this is where we highlighted. This is okay. We came down a little bit further. We came into this area. We've just held it and we pushed away. Okay, not a problem. Well, not so far. Depending on, like I said, depending on your plan. Maybe you took the bottom of this. It doesn't really matter. We did tickle through the 61.8, but it was pretty extreme sort of stuff. Don't be scared. Just have it as part of your thinking. That's all you got to do. It's just like, okay, well, hey man, I'm sitting up here. If it goes from $60, if it goes down here, well, what am I going to do? Am I going to panic? Am I going to hold? Am I going to get out? Completely up to you. But this is opportunity knocking. So I think there's the famous quote. I'm not sure who said it, but when opportunity knocks, it's too late to prepare. You prepare when you're up here. You prepare for that, and you prepare for this. And that way, if it gets down here, you're not on edge. You're not scared. You're going, okay, well, I've already thought about what happens if the market falls, and now it has. So I'll just do my plan. That was what I thought about when I was up here. That's it. Proper planning. That's all it takes. So just looking at the price structure of this. Okay, so we've had the push away, and again, we haven't really had the retrace. But that's okay. Because once again, maybe this is looking a bit more like it's going to go into a trading range. So maybe we just have to sort of put up with a bit more sort of sideways action. Okay, so that's just obviously a rough bar pattern, just to give you the visual idea of what we could possibly expect, because this isn't showing the same likelihood of trending, I don't think, as some of the other ones are. So that maybe they're just not. People just aren't as convinced to go into some of the more riskier stocks, some of the smaller names. Okay, so this is kind of the sort of thing I'd be looking for, and this is could extend on a little bit further. And then ultimately, what would you like to see? Okay, well, the same thing. You want to see that failed breakdown attempt, and then the breaking in a strong sort of trending impulsive move out of the range. We don't have that. I'm not predicting that's what's going to happen. I'll never predict. I'm just saying this is the kind of thing I'm looking for. But because I just feel like this is a little bit more likely, because it's just not showing the aptitude to rally and trend just yet. Okay, so same thing applies. We've got the gap here. That would be a nice target. And when we look at the last big swing, that just lines up with the retracement zone. So, maybe the market just does resist here initially. Before it goes a little bit further, and of course we don't know this is the bottom. We're just working off that assumption at this point. Time will prove one way or the other if this is going to end up being the bottom. So like I said, this one, just patience. I think it's just a little bit of patience, and also have a plan in place mentally if it's going to crack, because what are you going to do? You just got to think about what you're going to do before it happens. Okay, there's no point in sitting here and then going, oh, the market's come down and broken the low. Oh, geez, I better think about this. No, think about it now. Okay, think about it before it happens. So if it does happen, I'm not saying it's going to. I'm not trying to scare you. I'm not trying to fearmonger. If it does happen, you've already got your plan in place. You can just take action without having to worry about it, and you don't have to be scared about it, and you don't have to be on edge about it. Okay, this is the pointy end. I think URNJ, this is the pointy end of the wedge. So this is where I'd be paying a lot of attention. Okay, so let's just do the same thing that we're looking at. Okay, so that we've got that gap there. Okay, that's just the probably the main gap. And that, of course, will line up just underneath the retracement zone. Okay, so we do have the beginnings of a trend here. Okay, so we have come back here. So that's not a bad sign itself. I like seeing that. Okay, that is the basis of the beginning of a trend. Okay, of a trend change. Okay, so all we need to do is to beat this peak, this sort of around this $19.20. We need to just come up here to confirm the trend. Now, if this goes sideways as well, which I think there's a good chance it does. I'm not predicting that, but I just think looking at it, there's a good chance that it does go sideways for a bit. And this one's, likely to be a bit more volatile. So, it could be quite choppy. Okay, we could have quite a choppy sort of range like that. But it doesn't matter if this pivot breaks. I would consider that even if it goes all the way out to here, okay, and then, well, pardon me, I shouldn't draw it like that. This is what I'm trying to say. Even if it does this all the way out to here, and even come down here and then break, that's still going to be, for mine, a trend change. But it'll be more apparent on, say, the 4 hour or something like that. But we can still have a sideways action and then break the top, and we're still trending higher, okay? So it'll just be a trend on a bigger degree. If we did this, we're kind of not trending on the hourly, and that would be the first point of call, that we want to see the trend on the hourly. So we don't have it here. So this would be what the best case scenario is that we come up and we break this and we start doing this. Okay, that would be the best case scenario. But if we don't, that's okay. It just means that we're probably more likely to do this, and we're just going to have to bide our time before the market finds its feet. Now, this is, like I said, the canary in the coal mine. There's going to be less enthusiasm about investing in the more speculative names at the junior end of the market than there will be at the top end in places like CCJ and URA, where the market's more liquid and there's more places to run for cover. Some of these other names, maybe not so much. So let's just see how this pans out. Okay, so we're either looking for the trend change. Let's go. Okay, we can come back now here. We can start to fill out maybe a picture on the 4 hour or the daily. But right now we're just down here on the hourly, just inspecting what's going on. And they would be, there's three things that can happen. We can either trend change up, we can go sideways like this, or we can come down further. If we come down further, we just have to re-examine what's going on, go back, look at the big picture, keep our plans in place. If we're already out of the market, we just start to make a plan about getting back in. What do you need to see to get you back in? If you're back in, how are you going to run that position as a new position? Whatever you're going to do. Look, so I think I'll leave it there. I just think it's just really wait and watch here. So they would be the things that I'd be looking for. So look, take it easy out there. It is still very wild. It's very volatile. Keep watching the overall market. So see if it's finding its feet, which I think it's beginning to, but everything can change in the blink of an eye. There's still geopolitical risk out there. Everyone is still a bit unsure about the immediate short-term future. So once that resolves, then we'll know a bit more about where we are. So thanks for watching. See you next time. Bye for now.